Hi everyone, welcome back to my YouTube channel. Today we're going to be talking about the 3 patterns that I have been trading in 2026 that have consistently made me money. And the only reason why I want to share it now in July is because I have been trading them enough to know what the market sentiment is for this year and what has been working and what hasn't been working. A few months ago, I shared a video, the 3 chart patterns that you need, but the market shifts and the cycles are completely different. So I want to share what's happening this year because it is completely different than any other year. And at the end of the day, the patterns are similar. It's going to be breakouts, it's going to be gapper squeezes, it's going to be first green days. It's going to be very similar, kind of fundamentally the same, but at the end of the day, I trade them completely different. And the way that they show up in the stock market is also going to shift. That's why I want to share it so that you guys are prepared and can start seeing them. Because one thing is listening to 10 different people shout 10 different things, and now you're suddenly confused because you don't know how to do it on your own. Another thing is learning how these work and how you can actually implement them into your trading so that now you can focus them on your own. You can wake up one morning and say, that's a gap or squeeze. I'm going to watch for confirmation. Another day, you're going to say, that's going to be a breakout. I'm going to watch for it to start building on the previous days so that I can buy the breakout a little bit in anticipation too. And then you're also going to be able to tell when something's going to bounce, when it's going to have a first green days. Ideally, by the end of this video, you're going to be able to identify these 3 different patterns. And then you're going to start trying one with very small size, because at the end of the day, small risk, that is all you need to try something new and something that has been tested. And literally there's other traders as well doing it. You try with small size, and then at the end of the day, you narrow to which one works best for you. And that is exactly how exponential growth is built, because you start off very small, you start off not knowing what you're doing, and then you can start implementing these strategies. And that's when you know exactly what you're good at, what to cut off, and what you can add to. Let's go ahead and get started. The first one is going to be the gapper short squeeze. The short squeezes have been so popular in the past few years. The problem is, before this, there were a lot of shorts that ended up fading for the rest of the day, meaning they would go up and then they would start fading. People started catching up to this same exact trend, and now once everybody started short selling, the opposite happens. Once everybody's thinking the same thing, the stock started holding. And now once that hold starts to happen, that's when the short squeezes happen. And that's why we had CLRO, we also had NVVE, we also had UGRO, we had EHGO. And if you go back to these same charts, they all went up huge. Why? Because they were just insane short squeezes, and some of them didn't even have any news behind them. All it needs is a little bit of volume, some shorts trapped in it, and then it starts to hold, and then it starts going up huge. Why? Because the momentum is behind that ticker, because everybody's suddenly thinking of the same thing, and now everybody's trying to go through that same doorway. Think of it like this. There's a doorway and it is this tight. Now, one person tries to go through, there's no problem. Now think of 1,000 people trying to go through this same doorway. It's going to be chaotic. And that's where the biggest opportunities happen, when things just literally go full on chaotic and nobody expects it, but you can be the one who expects it. So how I find the gapper short squeezes. This is going to be sort of the easiest one to find because it's going to be very in your face. I am going to be checking for percent gainers with volume. I'm going to have an idea on news, but I'm also not going to base my whole execution based on the news, because news sometimes doesn't matter. All it takes is momentum and good volume. Now, once I have identified which ones have good volume, which ones are percent gainers, and which ones are the ones that are relatively holding up, meaning goes up to maybe 5, comes back down to the 4s, maybe the 3s, and then it starts to hold. And then 930 comes along, and then it starts going up a little bit, down, and then boom. Right? So this would be where my entry is. That's pretty much what I'm going to be basing it off of. But say there's 4 different percentage gainer. What am I going to do? I'm going to keep them on watch, and I'm going to check to see which one is confirming, which one is holding. VEEE actually today would be a perfect example. It opened, it was a percentage gainer, and then it had a bit of a stuff in the morning, meaning it had a red candle, but then you notice how it started holding. That's exactly what I mean. The beginning, you need to let it settle. Let it see what it's doing in the beginning. And then once it starts to settle and you see certain levels that are holding, that's exactly what it is. The second one is going to be the breakout. And this one requires a little bit more work because it is more boring, right? It's not the percentage gainer that is all up in everybody's face and everybody's watching and everybody's like, wow, exciting action. No, once the percentage gainer runs, I'm gonna put it on a watch list, right? You can even write it down on a journal, you can write it down on a notebook, wherever it is that you want to keep it. And then I'm gonna start seeing every single day, I'm gonna go back to that watch list and scan it. Before I make the watch list, I'm gonna see which one is holding, which one isn't breaking down. And why is it boring? Because it's not really moving, it's not really doing anything. It has the initial move and then it starts to hold. And these hold for 2, 3, maybe sometimes 4 days. You never know, right? Like CLRO, that is a perfect example. And NVVE, that is another perfect example, where it goes up, holds for a couple days, and then it has that run again. Why are those my favorite? Because nobody's really expecting it. And then once you are watching it, you know exactly what's going on, you can anticipate it a little bit with a little bit of a tighter risk. And then once everybody starts noticing it, you're already in it. Everybody starts chasing the breakout and you already have it. And that's the advantage that this one has, because nobody's actually watching it and you're the first one that's actually looking, but you're not buying just, oh yeah, this is holding, let's just get in. No, you're waiting for a little bit of volume. You're waiting for the higher lows. And then you're also checking that your risk is always staying the same. You're not going to change it. And you're also not going to be adding in the anticipation. The anticipation, you might have an entry or two, but once the breakout actually happens, you can add a little bit more comfortable, but all it takes is for it to actually break out with volume behind it. Say, for example, if you see one order that has a one singular $1 million volume candle, and that's just one person, that doesn't count. You need actual volume behind it. You want to see different trades. You want to see more people actually interested in it. And now pattern number 3 is going to be first green days. I'm going to give SDOT as an example for the other day. And this is the least explosive one because they don't really happen very often. But when they do, that means the stock goes up, holds, has that other run, and then it's pretty much had the blow off top. So now once it starts going down, and then it has a few red days, that's when you start looking for that bounce trade, for that first green day again, for it to bounce. SDOT was a perfect example. The day before was like the speed up to the downside. That pretty much signals that the move is sort of over, and then it's gonna maybe have a little bit of a bounce because it had that speed up to the downside. The idea behind a first green day is the more off its highs it is, the more of a chance that you're gonna have a bigger bounce. Yes, you could have panic dip bought it the day before, but it's a little bit too dangerous, especially with small caps, because you never really know. They literally might like go down and then never come back because it loses volume and then nobody's actually watching it. The idea is to first have that speed up to the downside and then see it build a little bit of volume so that more people start noticing it, and then you can buy into that bounce. And this can be a 10, 15, 20% move. And once that's over, it doesn't really happen again until a few days later. But that is the only time that I would ever trade these, is if there is a recent runner that actually did run for a few days and then it starts going down. So what happens is once it starts going down, everything that goes down eventually has to have a bit of a relief bounce. So it's like a bouncing ball. It's not going to be as explosive because small caps are a little bit tough with the volume. You need volume behind every single one of your trades. When something goes up so much, it has to come down. The same thing happens when something goes down so much, it has to go up. And that's why it's a repeatable process, but it doesn't happen very often because a lot of these trades have been losing volume in the past few days. But I wanted to include it because when it does happen, it can be a repeatable process. But I do believe that the first 2 chart patterns are the ones that we have been seeing a lot more often in 2026. Now I'm going to walk you through one of the trades that I took on CLRO and why I considered that a breakout and why I literally thought this is the recent runner that I am going to focus on today. For CLRO, this is the first day that I ended up not taking a decent trade on it because I was all caught up in CWD. But then once this started holding, I kept it on a separate watch list and I just kept scanning it every single day and just seeing if it was forming anything. So here is what I noticed. I noticed this channel start to build, and honestly, it was a pretty tight channel between the after hours on Wednesday and the pre-market, the full day of a hold, and then also after hours in pre-market before the day it actually ran. So this was a range between $8 and the $6. So now, once I did have this one kind of like picked out and I knew what I wanted it to do, once it started getting volume, that's when I started getting long. So I started getting interested not long, but once this in the pre-market started going over the breakout, and then it came back, it held the 8s, goes right through resistance, comes back down, becomes support. It tested a few times. That is when I started getting long. Once it tested the 825s and the 825s again, that's when I started getting long, and I ended up selling in the 12s. Once it does come right back and it dips, I guess this would have been a really good re-entry for a continuation breakout, but I thought buying it from the 820s and adding, setting into the 12s, that was a pretty good trade for me. So again, this is all very repeatable. And there was another one, NVVE. It was this same sort of situation where it held, ran the first day, came down, held for a few days, and then ran. So this happens again and again, but the difference between CLRO and all of my other trades is once it did start holding in the 825s, I ended up adding again to make the winner a lot bigger, and I ended up making around 3,300 on it, but that was only because I added to it. Let me know in the comments which ones of these you would want to master, and honestly, just at first glance, you can already start kind of like feeling which one you will feel the most comfortable with, because that is how I work. I'm very visual. So once I do see something and I can start identifying the patterns, those were the ones that I honestly went in and just started trading with very small size. And also just let me know if this genuinely did help, and if you guys want to see more insights on how I trade, what I've been doing for 2026, and things that have changed in the past few years with all of the different patterns that I've been trading. So let me know, and I'll see you guys in the next video.